Good morning. Holy cow, I can't even see that you guys are watching. Good morning, Dusty. Good morning, Wes. Good morning, Nathan. Happy Friday to you too. Not that it matters to you guys. If you are here, good morning, Hattie. Um, if you guys are here, it is North Dakota is like rain, crappy weather. We're just trying to get in the field. So, oh, Facebook changed my thing again. Okay, I'm going to have to adjust this. Give me 1 second. So I can see what's going on. How is everything going? No wonder why I thought nobody was on here a couple weeks ago. Because Facebook's not showing me anymore. Is the quality of the video okay? Keeps telling me I have to change something. And I don't know what that change is. We've got some good stuff because I've not been here for a while. And of course, I did not get up early enough to get ready. So bear with me as I go through things today. Facebook. So let me know if all is good for video on your side or if it's super choppy or what the deal is. So we have no sun again today. Gale force winds once again. Right, Hattie? Gale force winds. Tired of them? I saw the millennial farmer, the Minnesota millennial farmer posted that he was showing everybody his crops and they were in the bag in his shop. All his seed bags. Oh my gosh. Thanks, Wes. Thanks, Hattie. That's about what it's like. I did talk to my brother, and he was out going full force when he could. But he's got a lot left. So he's not super worried about it. But I think for whatever reason, I thought we were supposed to get more rain this weekend. Eastern side of the state of North Dakota is flooding. Nebraska got some rain. Yay. Alrighty, you guys, let's go over some of the people that I have talked to in the last several weeks. I'm not going to be gone next week, but I'll be gone the following week. I am going down to Fort Worth to meet with the James Nethery. Visit with him. We're going to be doing a podcast together, so I am excited about that. I can imagine Hattie. Like, it's it's insane. Okay. So you guys all know I love my millennials. Like, I love millennials. Anyway, probably because I see like all of the good ones. They're not all, every generation has its challenge of an individual, but I'm a millennial lover. So I met with a 27-year-old yesterday, and he is managing a 7,000 acre farm, and that guy has other businesses that he's got going on as well. And him and his buddy bought a FedEx delivery business. So they automatically have 30 trucks and 45 employees. And they've had that for not quite a year yet. But it was super fun to talk to him, and he's got a lot of great ideas. But they have a loan for the delivery business. But the delivery business is making enough money and they have term insurance on each other because that's what the bank required for the loan. However, my point to him was that's great. And, hopefully your buddy understands the whole life side of things, because as a business partnership, I've seen this happen before. As a business partnership, what happens is if you have term insurance, that when let's say that you buy this term when you're 45 and it's a 20-year term. Well, now you're 65, but you're not selling the business or you're not leaving the business, but you become uninsurable. Well, now your business partner can't buy any more insurance on you and you're not selling your portion of the business. I've seen this happen at about 60, where we're not quite done with the business, but now we don't have any insurance. So what do we do with the guy that's uninsurable? And then there's one business partner that is insurable and healthy. So you're better off to get whole life on all business partners of anything. I don't care if it's an operation, I don't care if it's a business. Get your whole life on everybody right away. And so the other thing that we talked about with him is so the business partner only has one job, and that is the delivery business. The other kid has this other job. So he's got extra income coming in. So what we'll most likely do is a small policy on each one of them to make sure that they're covered to buy out families. Because the crazy thing is they're both single. That doesn't happen very often, where you're both single, not married, no kids. So they're both single, but their portion of the business goes back to their parents if something happens to them. So there is still going to be a buyout, but we're going to have to buy parents out, not spouses at the moment. So the partner I talk to, we will just have it set so that he is... they've got two policies on each other, and then he will have a bigger policy from all the extra income that he's taking. And that way, the extra income with the bigger policy, he can lend that money back to the business to buy trucks because they're expanding. Like, the guy they bought it from was not old, but middle-aged. Okay. So he didn't expand. He didn't have the business mindset. So they're going to have more trucks. They're going to most likely have a tire company. They're going to have maybe a car wash so that they can just move their trucks in and out of that. Like, any aspect of that business, why would you not own part of that? So the expansion is huge, which also brings me to the fact that the amount of money they're making a huge net income. This huge net income, the accountant told them to take a $70,000 a year paycheck. So they are getting payroll of $70,000 a year. Yet they are expanding. And the past owner took a lot of payroll. Well, when you are an S Corp, you can take money two ways. You can take it as payroll, or you can take it as a distribution. If you take it as a distribution, it is not Social Security and Medicare taxed. You save like 15% or something. Now, I'm not an accountant, so please talk to your accountant about this. However, $70,000 a year for two people that just bought a business is a bit high in my opinion. So I told him to talk to his accountant. Can they lower that to, say, $30,000 a year and take $40,000 a year as distributions, and they would save like $6,000 in taxes? But all of their money is going back into the business to expand. I mean, they've like almost doubled one piece of the business, or they've tripled one piece of the business already. So if they don't need it to live, and if they don't need it, then don't take it as payroll. If they need it, then they can just take it as a distribution. Most accountants are going to be super scared of an audit. My accountant is not. And so I don't know what I'm going to make from year to year. I have no idea. I am not going to take this super high payroll and have no clue. I mean, they have a contract with FedEx. FedEx could pull that. They could lose an account, whatever that might be. That is like, it's not, even though it's somewhat, oh yeah, this is what we've done in the past, that doesn't mean any of this is guaranteed. The majority of their income, the way it sounds, comes from one huge business in their area. Well, if that business decides to contract with UPS instead, well, guess what? Now they don't have that business and they've lost it and they have this huge payroll to meet. So if we can change some of that, great. But now if we can take it as a distribution and we don't need any of it to live because they're young, can we fill these policies up as quickly as we can and turn around and lend it back to ABCD business to expand? So the other thing that his employer that he manages the farm for was giving him, he has a simple IRA. He was giving him an IRA bonus of a whopping $1,500 a year. And so I said, well, if he's going to give you that, or a 401k match, basically. So if you put your $1,500 in, he puts his $1,500 in. And it was funny because this kid is 27. Sorry, cat was leaving the room. So this kid is 27 years old. And he said to me, and he's been working there since he's been 20. So in 7 years, he's put in like 11 grand. And he said, and that's all I have today is 11 grand because the market came down and now I'm back to where I started. 11 years it took me to get it there. And now I'm back there. Okay. He's at 11. Now he has to go up here. I don't know where he was. I didn't ask. Let's say he was at 25 or 30. Okay. So now he's from there to here, and now he has to start back over. He's done with that game. He experienced it one time, and he's done with that game. And he's very, very entrepreneurial, very obviously. And so would that money be better spent with him being able to use it to create businesses? Probably, because that's what he understands. That's what he's good at 27 years old. He is going a long way, as is his business partner. So, and because his business partner, they're constantly feeding themselves with information, right? Tony Robbins, Grant Cardone, not my favorite people in the world, but that's kind of where I started as well. And then I softened it all up with John Maxwell. And so, like, you find your way, you learn things, you're constantly increasing your mind and bettering yourself. These kids are young compared to me. So I am super excited for them. But he kind of had a lot going on for somebody that's 27. A lot of things easy things that can just get ironed out pretty quickly. Okay, then I talked to another couple. This was interesting. They are a local couple, and I know them just a tiny bit, like just from Facebook, because we're Facebook friends. But they didn't know what I did. And so they learned what I did a couple weeks ago. And they brought their stuff to me. They have gone and listened to other people that are doing, that are utilizing life insurance. They are not doing infinite banking. They're not infinite banking practitioners. And so they have a little bit of inheritance and we're wondering what to do with it. Well, they showed me their existing policy that they started last year. It is not whole life. It is an indexed UL. If you guys did not listen to my podcast last Friday or the Friday before, I did a whole podcast on what the difference between whole life, UL, VUL, and indexed UL is. A whole podcast. Like, I tried to explain it as clearly as I can. I had to explain to them what they had because she frankly is not believing anybody at this point, and I don't blame her. Because who's lying? Why do we have so many people saying so many different things? An indexed UL is guaranteed to make nothing. It cannot go below zero. Okay? Here's the thing. She pulled up the illustration so I could see what it looked like because I wanted to see if it was going to survive. And I'm like, man, it looks really good. The premium is $100,000 a year until her husband is 100 years old. $100,000 a year. And I said, oh, you guys are going to put in 100 grand a year? They don't have money for that. And she's like, what are you talking about? I said, that's what your premium says. That's what the illustration says, is that you're going to pay $100,000 a year. And she said, no, we paid $30,000 year one. Yep. That's how it's illustrated. $30,000 year one. But that is not how it's illustrated every year after. It is $100,000. And you don't have enough money to pay $100,000. So where is this money coming from? She said, well, he said something about $30,000 that he was going to take from our investments because he is also a fiduciary. I don't give a crap what your title is behind your name. If you're not going to be honest and you're not going to explain what it is that you're selling, you can put whatever you want behind your name to protect your behind. Okay? So, $100,000 a year. I'm like, well, I can't. I said, where are you going to get the $30,000 a year from? If you're both retired, semi, right? Because they work here and there. So you have a little bit of income there. That's to pay your living expenses. You only have X amount in retirement. He's almost going to require required minimum distributions from his 401 or from his IRAs because he's going to be 72 in a few years. So now that money is going to have to come out of IRAs that he has not touched so far. So what's happening with all that? He didn't know what required minimum distributions were. Mr. Fiduciary has never ever talked to him about that. What do you mean? He's like almost 68 years old. Why have you not talked to him about required minimum distributions? Where is the money coming from to pay this premium? Is this policy going to last? Like, is there a surrender period? Because I'm not seeing the surrender period. So is there a surrender period? I have so many questions. It's crazy. But guess what? It's not whole life. And as soon as she asked for whole life, he was very clear that it is indexed UL. Thank goodness he did that right. And I hate to cut somebody down that I don't know and don't understand maybe the whole situation. But that's a good thing you're a fiduciary, because a client is not going to miss the fact that they have to pay $100,000 a year in premium. Holy Moses, that's a lot of money. Where is that coming from? So, oh my gosh, for 35 years. No. If you are working with somebody, please work with somebody that understands what we're teaching. You guys, I am not begging for business. I am protecting your behinds so that it is done correctly and honestly with the right tool. Not blowing some smoke up your skirt, telling you you're going to make this great rate of return. He had a 6% rate of return illustrated on that policy because it is it is not tied to the market. It is reflective of the market. So he has a 6% rate of return on there. Buddy, you wrote the policy last year and the market went negative. There is no 6% rate of return. Okay. Next guy I talked to was in his 50s, and he owns a portable sawmill business, which was super, super cool. And then he is buying land for taxes. Then he goes in and clears the timber and he's going to develop it. So that's super exciting. The thing with him is we cannot start right away. So I tell you guys, sorry, I know what's going on with my throat today. My daughter lost her voice, so hopefully I'm not getting sick. I am hoping that, or he doesn't know when he's got some land to develop and he's going to put some houses on it, but he doesn't know when that's going to happen. And I tell you guys, if you can't start right now, I'm going to tell you can't start right now. And so I just told him, let's just wait. because he's hoping to have this land developed and he's hoping to have his first house done by August so that he can be selling that. Well, then we can use that money to start. In the meantime, he's got money to start a policy, but that money also can be used to develop. And he's kind of in a stage right now where he doesn't have a lot of income, disposable income, to even start anything. So we're just going to wait until he sells some houses, gets some stuff developed, all that good stuff. But it was very interesting that the state that he's in, he can buy land for taxes. I don't know if taxes just don't ever go without getting paid in North Dakota, but I have looked at North Dakota before and there's nothing there. Like, I never see anything. Maybe I'm missing something. Maybe I'm not doing it right. But I have talked to a few people that are doing that, buying land just for whatever the cost of the taxes are. I better keep watching. Okay, had another lovely lady that her husband passed away in October, and this one also might get me a little riled up. So she had $400,000 of death benefit. She now has $300,000 because she went and paid everything off. She sold some equipment that they didn't need, and some other things that they didn't need, and she used that money to pay a bunch of debt off. Which at the end of the day, okay, that's fine, whatever. She is doing a little part-time job, driving the Amish around, which I think is absolutely hilarious because we don't have Amish here, so I don't know how that works, but I do know now. They hire people to drive them. And so she is doing that for income that is paying for a vehicle payment. But here's the thing. She owes money on the land. And she owes about $400,000 on the land and has $300,000 of death benefit. And that's it. We don't have any other cash. We don't have any other IRAs. That is it. That's all we have for liquid money. She is renting the majority of her farm ground out. The rest of it, she is farming with her grandson, maybe. She is farming with one of, I think it's a grandson. And so she has all the operating expense and she gets the profit, but they're kind of doing a crop share thing because he's actually doing the physical work. Now, she has a little bit of income from that, little bit of income from the cattle, and she doesn't want to stop farming. But at the end of the day, this is what the bank is telling her. Why don't you just pay off all of your debt? You take your husband's death benefit and you pay it all off. She has talked to 3 different people. I am not exactly sure what her accountant told her to do. Her accountant, she didn't say exactly what her accountant said, but she did tell me that she has talked to 3 different people and they have all told her to pay everything off. And I am the only one that has given her some strategies. And my strategy was do not give them 1 red cent. You don't pay the bank off. You can make the payment. They are dragging their feet refinancing it to her name because it was in her husband's name. So they're dragging their feet refinancing it. Why? Why are they doing that? If they're dragging their feet, you get your little butt to a different bank and you refinance that thing. And you go the longest term that you can. And she said, well, I'm old. I don't care how old you are. If they will go 30 years, you go 30 years. I don't care that the interest rate is higher. We have $300,000 of liquid money. That is it. And this lovely lady could live at least another 25 to 30 years. Okay? She is not that old. So if we give the bank our money to pay off the debt, that's fantastic. Her land is paid down. She owes $100,000 on it. Life is fabulous. What happens when she needs liquid money? She's going to have to go back to the bank, refinance the land, and get the money that way. The other thing is she's like, well, I could sell a piece of land. Why are you selling a piece of land? You don't need to sell a piece of land. Between your rent and the income from the farm, you will have enough because she has very few loans. You will have enough to pay that off or to make those payments, sorry. If you need money to make a payment, you have the cash to do so for a year or 2. We don't need to pay it down to make sure we can always make the payments. Remember, you guys, it's one pool of money. It does not matter where that pool comes from. She either has the pool of money over here to make a payment if she needs to, or she pays it all down and then she has to worry about making a payment forever. And if she ever comes up short for that, then she has to go back to the bank and ask for more money. And the bank's going to say, well, I'm so sorry, I can't give you any money because you're not making any money. Okay? She has liquid money that she could go, she wants to buy a neighboring farm and do a vacation rental with it because of the area that they're in. Well, fantastic. Then use your liquid money to do that so it creates more cash flow. I mean, it seems like that's all I ever talk about. And clearly it's because I have to, because we do not ask ourselves, how can I make money to pay for X, Y, and Z thing that I want? Okay. So in my opinion, absolutely horrible advice from everybody else. Oh, and this is what else I told her. So she has a piece of land. She has about 30 acres or something that the next door neighbor wants. Well, the next door neighbor will pay whatever he wants because he owns a bunch of fast food chains. And he has a lot of money. So he'll pay whatever. Now, I'm a little bit ornery, and y'all know that. The day her husband died, he said, are you going to sell that land? The day. You know what? If my husband dies and somebody asks me if I'm going to sell land the same damn day, you will be the last person. I will be dead before I will sell that land to you. That is the most cold-hearted, ruthless, selfish. Oh my gosh, I could go on forever. That ticks me off. So I said, don't sell him the land. If he wants to pay, he won't pay double for the land. But if you want to make double on that land, you go sell it to a young farmer and you own or finance that young farmer. And she said, well, this isn't farm ground. It is hunting ground. Well, fantastic. Then you sell it to somebody that wants it for a guided service, or you lease it to somebody that is guiding. And then you make money off of that land and you get to keep it, but you have extra income. And even the acreage that is farm ground that you were talking about selling, or that you may end up selling because you're renting it out. Well, the young man that's renting it, why not owner finance him? And I figured out her payment. It would be like $100,000 a year. I said, that is more money than you are making now farming it. Are the kids going to farm it? Nope, the kids aren't going to do anything with it. They don't want the expense. Well, if the kids don't want the expense, then she's like, well, I don't want them to be mad at me because I sold the land. It's not the kids' land. It is your land. You get to decide what you do with it. If she sells that land today and makes $100,000 a year and does not need to live on $100,000 a year and has extra, will the kids get the extra if she dies? Yes, they will. It all comes back to them. And especially if she's super smart about it and puts that money into other things. She is a farmer and they've ranched. She's never had $100,000 a year. That lady can live on far less than $100,000 a year. She's not even going to know what to do with it all. But these are all the strategies I threw at her. And guess what? Nobody else even talked about this stuff. Nobody. What? Are we, I mean, I don't know who she talked to outside of this one banker and her accountant. But she has so little money, we cannot give it to the bank and give up liquidity of it. We need to use that money for ourselves, have it for ourselves in case of an emergency. If there is something, then great, and we need it, fantastic. Then just go and use that money to make a payment. Well, good morning, Brian. Okay. And it's hard. Here's the other thing. It's really hard with a widow because it's still very fresh. Her husband just passed away in October. Like she said, for 4 months, she was just in a fog. And so, I can believe that. It takes time to heal and to get your bearings, and he did not die suddenly. They knew that he was sick. So it's not like it was a surprise. And people think, oh, I'll be prepared. No, you're not. You're not going to be prepared. I'm sorry. That doesn't happen. Okay. I had another gentleman that has a huge, I think it's a huge dairy operation. But it's probably not that big considering most huge dairy operations. But he has a dairy operation that he has a lot of money coming in for. He has a lot of employees, and he is at the point where he cannot expand anymore. So that means he was buying about $150,000 worth of cattle every single year with cash. That has now stopped. So he was like, well, I just don't know where I'm going to get the money to start this. But you're done paying $150,000 of cash to buy cattle. So what's going to happen at the end of the year when you haven't bought any cows? You're going to have $150,000 extra. Or you're going to have spent it on other things because you see that there's money in the account. So we could very easily use some of that to start a policy. The other thing that he did is he paid cash for a house where his one child is going to college because it was cheaper to buy the house than it was to pay rent. Well, if we're going to I guess he has a loan on that house, but nonetheless, he had a down payment and all that good stuff. So if we're going to have this cash, the one thing that Nelson always said is be an honest banker, right? If you are done making a payment, keep making that payment. But make it to a new policy premium because you were used to spending it. You lived without it. We're going to beat Parkinson's law and get ahead of everybody else. So if we're done making payments and we're not going to need them and he's not going to need them because he has no place to go. He does have land that he possibly wants to purchase, but he does not know when that's going to happen. So how about we save that $150, put it in a policy, and then when that land comes available, we have money for at least a down payment. Maybe they can owner finance you. I don't know. So, and he's always having to buy things. Manure spreaders, those sort of things are always having to be purchased. And so it's not like he's going to just stop buying stuff. But at the end of the day, especially cattle, like we got to have a place to put them. If we don't, then so be it. Okay. This was a young couple that started from scratch. He has a business where he is trimming cattle hooves, which I didn't know was a thing. So that was fun to learn about. Anyway, they are, and then they have some of their own dairy cattle and just really small, trying to get started. And for them, the bank is saying, nope, we're not giving you any money. You're tapped out, no money for operating. So a lot of what they're doing is on cash with their own money, and they never have anything. So she said to me, well, there are times I don't even have money to buy groceries. Okay, that means that we need to keep better track of our money, because if we have milk money coming in, that's happening monthly. So I said, you need to set up a checking account that X amount of dollars goes into that for family expenses every single month. And then the farm operates on the rest. But right now, he needs a grinder. He needs some tractor repairs. And then he's going to need a new chute for these cattle for when he trims. And the chute is going to be expensive. But the grinder, they're actually borrowing one from some people that they know who are very nice, and they don't need it anymore, and it was just sitting in the shop. Well, if they don't need it, then will they sell it for sale by owner, so they owner finance you and you don't have to go to the bank? And he had not thought of that. And I said, if they're going to allow you to borrow it for nothing, then you're kind of in a situation where nothing is better than something. But if you do need to buy it, ask them if they'll owner finance you, and maybe they'll go out longer. Or maybe they'll make payments really small and then you can do a balloon payment in like 5 years. Because they're just starting. That starting period takes a long time to get off your feet. But it can be done. You just have to be super diligent about it. And they are working their buns off so that they can make these payments. But the bank has basically said, we're cutting you off. They can't expand the dairy. There's a bunch of things that I suggested, and he's like, we can't do that because we don't have enough land. So, and there's nothing that the land that does not butt up to theirs. So then it makes them harder to do some of those things, because I do have a dairy farmer that they don't feed. They only milk in the summertime. They do not milk in the winter because they're on grass all the time. They don't have to buy feed. It saves them a lot of money. But these guys don't have enough acres to do that. So is there a way to do it? Rather than just saying we can't do it, is there a way? And there may not be. But then is there something we can do to reduce the cost of feed? Corn being $7 a bushel right now is not good for the dairy guys. It's good for the corn growers, but it's not good for the dairy guys and the feedlot guys who are finishing on corn. It is way more expensive, obviously. So with them, if we do anything, it's going to be super tiny, just for them to get started. But that's okay. Tiny is good. All right. What time is it? If you guys have questions, just drop them in. I didn't review outside of the ones that I had. Now I'm getting into the weeks past and I have to review them a little bit. Okay, so this couple has, he has an off the farm job. She's just at home. But again, a small operation on 40 acres. And they are sharing the house with mom and dad. So they moved from whatever state they were in, came back to farm with mom and dad. And they don't have they have one loan. That's it. But they too are just starting. They're going to add on to mom and dad's house, so they basically have their own suite. When mom and dad pass away, he gets the 40 acres. Now, he is really wanting to just quit his job, off the farm job, so that he can farm. And I totally understand that. My suggestion was, please don't quit the off the farm job. Because at this point, his wife can really take care of what's happening on the farm, but we're going to need that off the farm income to start the operation because it's small and banks don't like small operations. So keep working, but be smart about how we're using that money, because now we can build their banking system so that they can keep buying things. When you are a small operation getting started like this, I want you to have an off the farm job so that we have money to start the banking system. I know those of you that have gone through Ranching for Profit. Ranching for Profit says you are not focused on the farm. You are not focused on the farm when you are at work. I 100% understand that. But we need money to live and we need money to get ahead. So there might be times where we're having to work 80-hour weeks. Okay? I look at what my brother did. He worked off the farm for 15 years. He has more farm ground now than my dad because he sacrificed. My sister-in-law still works off the farm. It helps in those years that it's not such a good year. Can they transition? Yes, they could. They just don't want to because they like the security of it. She likes her job, all that good stuff. But if we only have 40 acres and we need to buy goats and sheep and pigs and whatever, they've got some of those long-haired cattle, which I absolutely love. Those, if we have to buy those things because the bank's not going to give us money, we need off the farm income. The more off the farm income we have, the faster we can do those things. Okay? Do we want to farm and ranch full time? Yes, I 100% get that. Even when I started my business, there were other things I was doing on the side to make money because this was not paying the bills. And then I was able to make that transition. So if you can work on and off the farm, that would be awesome, for a short time. And these guys are young, they have time to do that. Okay. We have another couple that they have 2 kids. And both of them are boys. One is on the farm. The other one is not on the farm. But the one off the farm still has shares. They have lots of different entities. And the one off the farm still has shares in some of the stuff, or still going to get some of the stuff. And he's not working on the farm, but he is financially vested to a small extent. And so mom and dad are over 70. So I can't do anything on mom and dad. But I can do something on the boys. So mom and dad could definitely, they have a lot of money in IRAs and annuities, just investments in general. But they're at the age where they are having to take required minimum distributions. And they sold some land, or they sold a business, so that income was coming to them. That's going to stop now. They also have land in a state where the city is expanding, and they're going to get kicked to another area. And so there's going to be some income there at some point, most likely before mom and dad are passed. They're going to try to hold out as long as they can, but it's going to be there for the kids. So because we can't do life insurance on mom and dad because they're 70 and older, I said, well, that doesn't mean we can't do anything. You can own policies on the boys and then use that. And then when you pass away, the boys just inherit those policies and take over the premiums. So that is what we are most likely going to do there. But this family is awesome because they have businesses and they've started other businesses, and some of them are together, some of them aren't together, but they talk about the finances and they understand everything that's going on as a family. Now, does that mean that the kids get to make all the decisions? Nope. The one off the farm isn't making any decision as far as I can tell. He's just there. His money's just there, and he's helping when he can. But he doesn't have any interest in it. Okay. We're running out of time. Let me see what else I got here. I'm going to go through a couple of these. Oh, this young man was, I met with a young guy that was 22 and an electrician. He's living rent-free. He does not live with mom and dad, but he's living rent-free, and all he has is a pickup payment. He doesn't have anything else. So he only has about $11,000 in savings. And I said, well, where's all your money going? Because he's making a lot of money as an electrician. And he didn't know, right? Because when we're young and we make a lot of money, here's what I want my blue collar young people to understand. Plumbers, electricians, linemen, construction workers. Like, you guys make a significant amount of money as a young person. Don't blow that money in the bar, on shots, on booze, or on toys, four-wheelers, motorcycles, whatever it is that you're buying. Tires, jacked up whatever, exhaust. Like, I get it, you guys. Remember, I grew up pretty blue collar. I have a stepson that is very redneck. Like, I get it. I love the exhaust myself. I love it. But we have to be aware of what we're doing. What do we want to do? What do we want to accomplish? This young man wanted to be retired at 55. Well, then he's going to need $5 million to live like he's living today, which is basically on nothing, right? Because he's single. I mean, he makes good money, but at the end of the day, that money would not support a family. And so it's going to support a single guy living rent free. So I said, you're going to need to start saving. And he said, if it's taken from me, I can do that. So kudos to him for reading the book, opening his eyes to it, and changing his thought process. Okay. His dad sat in the meeting to make sure that it was all good. His employers, he is the only employee now. So his employers said, well, we'll start a 401k for you. I said, do you need a 401k? Can they just give you the same money they would have given to the 401k again and put it into a policy? Because he's going to want rental properties. He may end up buying them out someday because they're 20 years older than him. Are you going to need that money at some point to start your own business, to do something with? Right? Why are we putting it in a 401k now just to end up like the 27-year-old where we started with 11 years or 7 years ago? So, oh, and he's got some sheep. But that was an interesting call. Mom and Dad really thought that they were, Dad didn't want to do anything on his own stuff with the life insurance. But I'm hoping that it opened Mom and Dad's eyes to say, oh, you know what? We have some generational wealth, or we have some estate planning that we need to do here, because there is still a farm and he's the only one that's going to take the farm over. The other sibling is not going to do that. So some things to talk about there. The one thing that Dad questioned is, where is that money going? If he's putting $12,000 a year in a policy, where did the $3,000 go that he didn't have access to? Well, it went to buy life insurance. And his words were, why is the company taking that money? The company is using that money to invest so they can pay for the death benefit. So this misconception out there that the life insurance company is taking money and just sitting on it and getting rich is crazy. Okay? The companies can't do that. They have to pay a death claim. So all this noise of everybody that thinks that they know what the heck is going on with life insurance is a little bit frustrating at times, because it's just like, oh, you make so much commission. How much do I make? Could you please inform me? And how do I get paid? Because clearly you know more about life insurance than I do. I mean, it's absolutely, just stop repeating what we've heard and start asking those questions and doing some of our due diligence. So he was obviously it was a very nice conversation. But once I explained to him what happens, it almost was like a light bulb moment. Like, oh yeah, okay, they do have to pay a death claim. I mean, think about it. We're going to give you $12,000 and there's a $500,000 death benefit. Or better, I don't remember what it was. It was over $1 million. It was 1.2 or something. That $12,000, how does a life insurance company take 12 and pay out 1.2? You would go backwards very quickly. They have to take some of it, invest it so that they can pay that death claim. Okay? All right. I met with, this couple was very sweet. They were in their early 50s. They both had just 8 to 5 jobs. And they're worried about retirement in their early 50s. And they have, they have a little bit of money in 401ks and IRAs. And it's about $20,000 is all that they have in investments. And they don't have anything else. And so really our conversation there was, hey, what do we do to create some cash flow? Is it rental properties? Is it land? Is it starting a business? What is it that you need to do to create cash flows? Because we're coming in this at 50 years old and we are not, you're not at $20,000, you're never retiring. Just not happening. So the other option is to say, well, we need to find out where the cash flow needs to start. Okay. Geez, I got a lot of single people lately. Well, that guy we don't have to go over. Another single guy. Oh, this guy was so fun to talk to. So he is a machinist, but he dredges for gold. He does some crypto mining. Um, he helps another guy farm. So he's kind of got his fingers in a lot of things that are not normal by most people's standards. But he's single. And so he's very frugal. He does not have any loans. Couple loans. That's it. But again, somebody to get started on a small scale, because then we can turn around and buy more dredging equipment. We can turn around and he wants rental properties. He wants a farm. He wants to start like a fish farm. And that's awesome. So now we can start some of those things. But the bank is not going to give us money for a fish farm because the banks do not understand fish, right? They are not going to see the benefit of fish. So we are going to start something small on him, and he's young that we can do that. Let's see. I'm going to go through some of these and pick out some of the ones that have more information. And I'm going to be done here shortly. So if you guys have questions, let me know. This guy just farms with his dad, has some of his equipment, other equipment someplace else. This is kind of your typical farm. They do have a lot of money in stocks and bonds and savings, and so moving some of that over to be utilized better is going to be a big deal. Let's see. Another widow whose husband passed a little over a year ago. She also thought she was going to have to sell the land because she has about the same amount of liquid money as my last widow. She is still working. What she does for a living is very physical, and it is required that she do it, nobody else do it. So she is wanting to sell the ranch, yet we don't need to sell the ranch. There's a lot of different things we can do with the ranch that will generate income just because of how her setup is. So can we generate income and have that ranch generate income, and then we don't need to sell it? The interesting thing there is one of the children is being a little bit difficult, and I think a lot of that is just processing dad's passing, because this child was very close to dad. And so I think a lot of it is just processing dad's passing, and everybody mourns differently, and it takes everybody more time to mourn than the rest. So there's some family dynamics there that kind of have to be given some time or cleaned up. But again, I talked to her about owner financing it, maybe just selling a little piece of it. She wants to buy a home in another state because she was never really able to go on vacation, and she did, and she enjoyed it. And so I'm like, well, why don't you just have a ranch manager? And then that ranch manager can do things on the ranch that would bring in income because they have an arena. So that would bring in income, and they could live there and they could take care of it. And the physical labor is not so much on you. So I have a lot of widows. If I think about all of my widows that have come to me through the years, there's a lot of them, and it's really crazy, you guys. Women are taking over the finances after their husband passes, and nobody is sitting down with them and explaining it. So if your husband is still alive and he's managing the finances and you are no part of it, you need to pay attention to that, because at some point you may be in this situation where you're going to have to make a decision of what you're going to do, and you're not exactly in a mental state to be making those decisions at that time. And people are going to give you horrible advice. Okay. Another family operation where the parents were 70 and older, and yeah, we'll have to do something on the kids. Okay, you guys, I am out of time, but I do have more people to go through, but let me see if I have anybody in here that has something. Nope, those were the guys I went over last time. I was gone for a week in there, so I didn't have anybody for a week. Okay, that's it. That's all I've got today. If you are listening and don't know if you should get started, then set up an appointment. If you can't start, I'm going to tell you can't start. If we can start, we'll start. If we can start really small, we'll start really small. If we have to wait, we'll wait. But if there are things that we're trying to do and we don't know how to do them, I may have an idea. Worst case scenario, we visit for an hour. If you have an hour. Now is not usually the best time of year, but all right, you guys, let me know if there is anything that I can ever do for you. Message me here, email me, Mary Jo at Without the Bank. Go to Farming Without the Bank or Without the Bank, grab your books. If you are on the TikToks, I am over there as well, so you can go there. MJ Irmen is how you can find me over there. Otherwise, have a great day, and thanks for tuning in. It was good seeing you guys again.